Good day from Ho Chi Minh City. Early October, we released our strategy report for the month titled Stay Defensive. Basically, our view is that markets are going to probably stay quiet for the first month of the fourth quarter, which is October, obviously, but could be rallying in the last part of the year. We did some work this month on banks, global banks. We show here on the slide that the global banks have not done well at all so far in the last year, especially since the beginning of the year. Stock prices returns are negative. But if you had been invested in Vietnam, you would have seen, which I'm going to show on some slide here, but anyway, it's not showing, that Vietnamese banks have outperformed global banks so far this year. Some of the banks we follow are up 20 to 30% year to date. The only ones that sort of matches that is JP Morgan, which is up about 8% as of the end of September. Now, the interesting part of this is because Vietnamese banks have done very well, but their valuations are fairly high in terms of PE or price to book value. So that just goes to show, and it's been documented over the years by various research, that valuation is not the driver of bank stocks. The driver for bank stocks is basically the fact that investors believe in management and the fact that the bank has the steady trajectory in terms of NIM and profit growth. So ASEAN markets have done well in the third quarter, especially Thailand, which is up 12.2% in dollar terms. Vietnam has done well. It's not on the chart here, but the Nikkei has done well, up 5.6%, which has been a support for the rest of the region. One of the reasons for that is the weakness in the yen. Obviously, that supports the equity markets over there, and that supports equity markets everywhere. So let's go back to banks for a second. In Vietnam, we expect that in the next few years there will be more consolidation in the sector because there are too many banks, and most of them cannot fulfill the requirements of Basel II. I'm not sure how it's going to come about and what is the timing of that, but it's something that's going to happen. We've seen it in Malaysia and Thailand, in Indonesia in the last couple of decades. So here it's going to happen. Well, you choose your pick, but I'm not sure what the timing is. In terms of the economy, GDP growth has slowed in line with our expectation. 6.9% the third quarter, year over year. Basically, we expect GDP growth to trend to about 6.8 to 6.9% for the whole year, and probably decelerate a bit in 2019. A couple of reasons for that. One of them is obviously this China-US trade war, and the second of it is rising inflation that puts pressure on consumers' disposable income. So on this chart number 10, we see that interbank market rates have gone up in Vietnam, obviously due to the Fed raising rates, the possible end of QE in Europe, and eventually in Japan. So it's pushing rates higher everywhere in this planet. In fact, 10-year US rates jumped to 3.25% yesterday. I mean, not yesterday, on Friday, due to pressure on inflation. So the VN index surpasses 1,000 in September. Foreigners were less selling than prior months, and have even turned buyers in many sessions. So evidently what they're looking for is stocks that can benefit from this trade war, and we highlight textile and seafood as some of those sectors that could be interesting in that case. In fact, we see on on this chart 13 that some of these stocks have gone up quite a bit already in September. TNG is up 43%, TCM is up 28%. Liquidity improved quite dramatically than in the first few months of the summer. So that's a good sign for the market. As we see on chart 14, volumes have come back up a little bit, especially in certain sectors like the industrial sector and the banking sector. We think that we maintain our outlook for the VN index between 960 and 1040. We're right now about 1010 or something. So we think there's a bit of upside, but after that's going to be pretty flat until the end of November or so. As I mentioned earlier, we expect a rally in December because of portfolio positioning and hedge funds underperforming. They need performance, and when the month of December happens, they try to push markets up. Would that help the VN index? I'm not so sure, but it will certainly help the other regional index as well as European and the S&P. So one of the news this week was that the FTSE said that they would try to put Vietnam into one of their indexes by March 2020, or the latest September 2020. Vietnam has met the criteria for what they call secondary emerging basket. So it should be a given, but it's still in 2 years almost, so it's not for tomorrow. But positioning will probably start happening fairly soon. In terms of the market outlook, as I mentioned, one other thing that happened over the weekend or before the weekend was the agreement between Canada and the US for a new NAFTA agreement, which would change its name to, I think, US, Mexico, Canada, something like that, which is probably kind of bullish for Asia in general, because it eliminates the threat of a full war between China and the US, because as I expect, China and the US will now be able to negotiate in a more calm manner. So as a result, the PBOC dropped its reserve requirement ratio by 1% over the weekend to try to alleviate the continuous drop in the stock market, which obviously hasn't happened since the Shanghai exchange today. Shanghai A shares today are down 3%. But the bottom line is that relations are improving globally. Mr. T in the US, I call him Mr. T, but it's Mr. Trump, obviously, has done some work to improve relationship with his two neighbors. He has done some work to improve relationship with Europe. Has done some work to improve relationship with South Korea and now North Korea, because the Secretary of State is in North Korea today. And he probably, the next move will be after the midterm election to improve relations with China. As you may know, soybean exports from the US to China have dropped 11% month over month in August because China imposed tariff on soybean imports from the US. So some of these farmers in the Midwest of the US are Trump supporters, they're Republican supporters, they're not happy. So something has to be done to make them happy. The other thing we mentioned is that basically Treasury yields reached 3.2%. It's the highest level for a while, and it's a breakthrough from a 37-year sloping trend line. This is significant to us. That's why inflation and Treasury bond yields around the world are rising. So we mentioned about the FTSE watch list, and that's probably what is to watch for the next couple of months in Vietnam. On the currency side, the dong has stabilized along with other currencies except for the Indonesian rupiah and the Indian rupee, who are still weakening and are at their 20-year lowest level. But the Thai baht has appreciated, the Sing dollar has appreciated slightly, so the dong has not been much affected by weaknesses in Indonesia or India so far. Couple of ideas that we like in Vietnam: oil and gas stock. Oil prices have done well, as you know. Stock prices here that are related to that sector have done quite a bit in the last 2 months. But we still like PVD, PVS, PVB on a maybe midterm horizon, couple of months. What is the only negative on our point of view is the low jackup rig day rate, which are still decreasing compared to a few quarters ago. So for now, these companies are vulnerable to these rates, and they're vulnerable as well if Russia starts hiking its production of crude oil. We all know the Iran story, but to us, it's a story that's already priced in. And one other theme that we've developed this month as well is high dividend yield stocks. In an environment of rising interest rates, you want to own high dividend yield stocks. So we have a list here on slide 22. One of our top pick is SJD. Because of a particular condition, you can see a report on that from our analyst. And we have another couple of stocks that are listed on page 22. CVT is one of them to take a look at because of the growth stories and its investment in new high-end product lines. So basically, we stay defensive. That's why we recommend stocks that yield pretty good dividend. Our model portfolio is up on 11.7% since we put it together in late June 2018. The market is up 6.6%. We have reduced our position in Vinhome to 5% weighting because the stock had gone up by something like 62% over 3 months, less than 3 months. And we're looking at putting some of the cash that is at around 20% now back into the market in November or early December. This is basically our call for this month. If you have any question, let me know or call us. Bye.
You want to ask something?